What is up, my Forex for Beginners family? Okay, so today we're going to be learning about pips and pipettes and how to use it to measure a stop loss. Okay, so one thing I'm going to mention before we move on, I want you guys to really master each lesson before you move forward. Just like this lesson, which is going to be about pips, I need you guys to totally understand each lesson so you can fully understand my strategy that I'm soon going to release. As well, I'm going to release a trading plan for you guys all to follow, because these are all really important. It's going to include risk management. So I have a lot of great stuff coming up for you guys, but I really need you guys to understand the basics. So again, before you watch this lesson, make sure you fully understand the past lessons. So today, I'm going to teach you how to use pips and how to use it to measure your stop loss, because you need to know how to do this in order to execute the strategy that I will show you coming up soon. Okay, so I'm going to provide you this little document that I created here, and so you can download it and print it out and have it as a reference. So it says, what is a pip and how to use it to measure our stop loss? So a pip is a unit of measurement and is the fourth decimal place of a price quote. So if you see here, if you move the decimal place 4 spots, 1, 2, 3, 4. So right here, this 7, this represents a pip. So just remember that the fourth decimal place. So 1, 2, 3, 4. This is where we'll look for if the value changes. This represents a pip. So right here, so let's read this. If price moved from 0.68276 to 0.68286, this is a 0.001 move. So again, see how I moved from 7 to 8? That is a 1-digit move in the fourth decimal place. So that is a 1 pip move. So you understand that? From 7 to 8, it is the fourth decimal place. So this right here, this fourth decimal place number, moved from 7 to 8, and that is 0.0001 move, which is 1 pip. So just remember that, and you can reference this document, but the major thing is just remember it's the fourth decimal place. That's all you need to know right now. And so what is a pipette? So the pipette is the 5th decimal place of a price quote and is equal to 1/10 of a pip. So really here, all you need to remember is a pipette is the 5th decimal place. So we'll just move this decimal 1, 2, 3, 4, 5. So this value right here is pipette, and this would represents, I guess, 6 pips, or pipettes, sorry, 6 pipettes. So if price moved from 0.68276 to 0.68277, see how the 6 changed from a 7, and it's the 5th decimal place, which represents a pipette. So this 0.00001 move is 1 pipette. So just remember, the 5th decimal place, it represents a pipette, and the 4th decimal place up here is a pip. So 4th decimal place is a pip, 5th decimal place is a pipette. Just remember that, and let's move on. Okay, so I want you to focus on the last 3 digits. The last 3 digits will be the only digits that change. So when you're looking at this price code here, when price fluctuates, usually it's the last 3 digits are the only digits that aren't going to change. The rest of the values are too high and price rarely fluctuates these numbers. So we want to focus on the last 3 digits when we're looking at Australian dollar versus US dollar price quote. So we're just looking at the last 3 digits now. So here, so I blanked out the first 3 digits, and we're just looking at the last 3 digits. So if we have triple zeros and the digit changes to 276. So the last 3 digits, it goes from 000 to 276. That equals, and so because I'm going to be moving 1, 2, 3, 4, 5 decimal places, and that represents a pipette, this is a 276 pipette change. So just remember that the last 3 digits, if you see price fluctuate from say the values are triple zeros, if it fluctuates to 276, that represents a 276 pipette change because it's a 5 decimal place. Move the decimal place 0.5 places to read in pipettes. So just remember that. Move the decimal place 5 places to read pipettes, or move it 4 decimal places to read in pips. So 1, 2, 3, 4. 27.6 pips. So I want you to just remember we're going to focus on the last 3 digits, and if the value changes 276, we read that as 276 pipettes or 27.6 pips. Just remember that. I know it's a little bit of math and you're like, why do I need to remember this? It's actually going to be really easy. So just remember the last 3 digits. So now I've defined what a pip is, what a pipette is, and I told you to focus on the last 3 digits. And when there's a 276 value change, we read it as 276 pipettes or 27.6 pips. Okay, so that's how you read the values. So now we're looking at TradingView here. So this chart, I took a screenshot from TradingView. So this example is how to measure 15 pip stop loss. And I'm going to show you how to do this also in TradingView, but we're using the measure tool or the time and date tool. I'll show you this in TradingView after I show you this example. So we're going to use the measure tool or the risk and reward tool. So say we were going to sell here. So in this example, we're selling the Australian versus US dollar here, and we're going to set a stop loss just past 78.6% retracement level. So we're selling right here, and we want to set a 15 pip stop, which is at 78.6. So I'm going to show you in another video or in the same video, but this blue box right here, this is the time and date tool or the measure tool. So basically I drew this box from our selling point all the way up, see this arrow up, to our stop loss. And right here, see this blue box, it's giving me data on this distance. So from my sell to my stop loss, this tool is showing me that it's 0.00150, which is 150 pipettes, or 15.0 pips. So see how we can use this tool to measure from our sells where we sold. It measures back and it shows us right here that it's 150 pipettes and a 15 pip stop. So that's one way we can measure our stop loss, how many pips our stop loss is. So the goal of this training is to have you understand how to measure your stop loss in pips. So we can also use this tool right here on the right that you guys should be familiar with. This is our risk to reward tool. So when you open up the risk to reward tool, you're shown right here, it's in line with our sell. This red area is our stop loss, which comes up to our stop loss area here. And then our take profit is back down here at the 0%. So that's why I drew our risk to reward tool down here to our take profit 1 area. So as you can see also on this tool, it shows us 150 pipettes. So it actually shows 0.00150. But to read that, you just move the decimal place 5 places and you get 150 pipettes or 15.0 pips. And then here it also shows us our risk to reward. So it's saying for every 15 pips we risk, our take profit will be 2.2 times our risk. So 15 pips here times 2.2 equals 33 pips. You see how they got that? So 15 pips multiplied by 2.2, which is our risk reward, gives us 33 pips. And here again, 150 pipettes multiplied by our risk reward, 2.2, gives us 330 pipettes. So that is the second way you can measure your stop loss in pips and pipettes. So now that you know the definition, you know how to use the TradingView tool to measure your stop loss in pips and pipettes. Now we're actually going to go to an example of when we place a trade and use our stop loss that we calculated up here. So right here we calculated our stop loss is 150 pipettes or 15 pips. So I just wrote it down here. So our stop loss is 15 pips or 150 pipettes. Our volume or lot size. So this you need to remember is from here. This is Hugo's Way MT4. So when we go to place a trade, you just hit new order. You will get this pop up right here. So see here this volume. We always want to have it right now. Since we're learning on demo, I want you guys to place, start getting comfortable placing trades and not worrying about your stop loss. So we're just, for now on demo, we're going to be trading 0.01 lot size. So this says volume. So this word is used interchangeable. So this is your position size. So if you want to buy or sell, when someone asks you what your lot size is or volume, this is what they're talking about. So your position size, I sometimes call it, but lot size or volume. So 1 second here, let me just minimize this. So 1 second. So here, so our volume is 0.01, so 0.01 as you can see here, and then our stop loss is 15.0 or 150 pipettes, and our risk to reward is 2.2. So I'm just gonna move this to the side right now, and then so again back to calculating our stop loss. So our lot size is 0.01, so our lot size or volume, we can use that word interchangeably. Lot size or volume is 0.01 multiplied by stop loss in pipettes. So if you go 0.01 multiplied by 150 pipettes, it'll give you your stop loss value. So I really want you guys to understand this calculation, because this will give you your stop loss amount in dollars. So you'll know exactly how much you're risking. And then your take profit value is your risk to reward multiplied by your stop loss value. So if your risk to reward is 2.2, you multiply that by 1.50, which is your stop loss that we calculated, dollar amount, is $3.30. So basically here, this trade, we risked 0.01 was our lot size. So our calculation was 0.01 multiplied by 150 pipettes, gave us $1.50 stop loss, and then our take profit was $3.30. So I hope you understood that part. Now I'm actually going to show you how TradingView, and I'm going to show you an example in TradingView, and also I'm going to show you in MetaTrader 4 right now. So in MetaTrader 4, if we go new order and we place a sell and our position size is 0.01, if you hit sell, I want you to come here and then left click and then drag. So you see how I'm dragging now? So I left clicked and dragged. So I just want you to view here. So I'm gonna go down here. So see how it's showing you, even though it says pips, it's actually in pipettes. So that's why it's a little confusing. So that's why I want you to, so in our example, we used 150 pipettes or 15.1 pips. So I want you to make sure you know how to read this properly. So when it shows 155 or 100, See right here, it's showing 151. That's 151 pipettes or 15.1 pips. But for MetaTrader 4 purposes, I want you to use pipettes. That's why I'm teaching you to also know how to use pipettes. So here you can see that 151 pipettes also equals about $1.50 stop loss. So see that? 150 it's showing you, and $1.50 is our stop loss. So if you just let go and hit modify, and now you have a stop loss that's at $1.50. And then in our example here, see how we had a 0.01 multiplied by 150 pipettes, it gave us $1.50. So that's how you can use MetaTrader 4 to place your trades and know exactly how many pips you're risking. So here, so in TradingView, we found out how many pip bets we're risking. Then we went to MetaTrader 4, we placed our trade 0.01. We dragged a stop loss back, and it showed us 150 pipettes, which equaled $1.50. And then we let it go, and we said, and we set our stop loss at 150 pipettes. So that's how you use TradingView and MetaTrader 4 to place trades and know how many pips or pipettes you're risking. So now I'm going to show you the last example. I'm going to show you in TradingView. So TradingView is where we do all our chart analysis. So in the latest trade that we've been following in the student group, I'm going to use this as our example. And here, I want you guys to also use this tool here. And I showed you this in a previous lesson. So this right here, this little rewind, looks like rewind button, it's the bar replay. So when you hit the bar replay, you get this little menu here. And then if you tap, it's already selected. So see how this red line is coming up. So I'm going to just replay to about here. I'm going to start it here. Okay, so I'm going to use this latest trade example, this latest trade I took as our example of how I placed a trade, and I set a 15 pip stop loss. So I want you guys to practice setting a 15 to 20 pip stop loss. So I want you to look for trade setups on the 4-hour chart like I'm going to show you right here, and I want you to practice on demo placing a 15 pip stop or a 150 pipette stop loss and maximum 20 pips. So I'm gonna teach you to trade. Ideally, I want to look for trades where we only risk 15 pips as our stop loss, because we want to have a nice stop loss, but we don't want too much of a stop loss because we want to preserve our capital, right? If our stop loss gets hit, we want to protect ourselves, but we don't want large losses, right? So we're going to use in this example, and I want you guys to practice, is looking for trades with a 15 pip stop loss. So as you can see, price was, it was coming down here. We set up a Fibonacci retracement. So we ran fibs from here down to here. And now we're looking at the retracement from here. And you can see price came up to this daily level, and then it got shot back down, and then it started coming back up. So right now we weren't really quite sure what it was doing. Price came, it came to this daily area and then slammed back up to this daily area here. So say we weren't sure what we were gonna, when we were trying to look for an opportunity to join the trend, right? So we're just watching. Let's let's hit this bar replay. So when you hit, this is the play button and this is the forward button. So if I hit it one forward once at a time, it'll play one bar at a time. So we're gonna just continue. So say we weren't sure where we're gonna trade here. All we know is the EMAs, the blue and red, are separated. They're getting closer. We're not sure see how when price is falling that these EMAs are separated, and you know that it's trending fast down. But here now the price is hitting these EMAs, so we're not sure what price is going to do here. So we don't want to. I know some of you get a little anxious on you want to place a trade, and I understand that we always want to be in a trade, but you got to learn to also sit back and just wait it out when we don't see a trade. So right now, I know a lot of students were watching this and they were like wondering, wow, I want to get in. Do I buy? Do I sell? But when price comes and hits like a bottom and then it starts hitting these blue and red moving averages, that means price is still trying to decide what it's doing. So it might be a reversal area. Maybe it's time to go up for a while, or it might just come crashing down. But you can see that it came down and now it's having it's trying to figure out which direction it wants to go. So I'm just going to play one bar here. So then we got this big spike up. And I talk often about my sweet spot here. So my sweet spot is between 78.6 and 61.8. So this is a nice spot to join the trend back down. So, but right now we spiked up to past 78.6, and we're in this, we can go back to 100% without breaking structure, right? It can go back all the way to 100% and then continue down, and it maintains structure. So that's why I said it's very, you guys need to understand market structure. So make sure you know what I mean by 100% retrace. If it doesn't break 100% retrace, that means the trend has not broken. It can continue down. But if it breaks above this, then maybe a new trend has started. But right now we're looking for a sell. Right now, I don't really see a sell opportunity. All I know is I'm just making notes as things happen. So the EMA 50, I'm always watching the EMA 50. This is this orange line. And try to use the same colors that I use. For the EMA 50, I use orange, and I'm always watching what price does around here. So I made a note that price came and hit the EMA 50, and I'm expecting it to act as resistance or maybe support, but I don't know. So I just make a note on your chart, right? So I'm gonna hit the bar replay. So I'm gonna go one more bar. So I hit there, and so we got this doji type of candle. So it's telling us that it's not sure what direction. So and this doji happened right after it hit the EMA 50, right? So I knew that price was going to slow down around here, and it had to make some sort of decision. So I just made a note on my chart, EMA 50 acting as possible resistance. And then we got this doji, which see how doji shows it, price went up and then came back down, went down, came back up, and it closed about the same price. That means price hasn't changed very much in the last 4 hours. So just make a note that the EMA 50 is acting as resistance. So let's play the next bar. So then we get this candle, and it's not much different, but you can see it's closed lower, right? It's slightly lower than, and it's below the EMA 50 for resistance, right? EMA 50 is below it. So what do? I just make a note of that in my head. Wait for the next 4-hour bar. Boom, we get this big bearish candle. And we didn't expect, we weren't sure that, we didn't know that it was going to have this big crash, so we couldn't have caught this. So don't feel bad, just it is what it is, right? Just note that, hey, the EMA 50 acted as resistance, clearly. So, we just make a note in our head and we continue. And let me play the next bar. And then this next bar, or this next candle, you can see that it tried to break up. See this daily? We're at a daily level here. So this last bearish candle broke through this daily level. and then the next candle, see how this wick, it wicked up, tried to get above the daily, and then got hammered back down. So this price, it really didn't change much. It tried to break above the daily, this daily level, and then got hammered down. So I just made a note of that. I said, okay, price tried to get above this daily and failed. So I just made a note of that in my head, and then I'm gonna play the next bar. Then boom, we get this candle. This next candle is, what is it? It's bearish engulfing. This candle engulfs this past candle. So what did I made a note here, bearish engulfing out of the sweet spot. So I made this, remember how I marked up the sweet spot? So price jumped up here and then it got hammered out of my sweet spot. Sorry, it got hammered out below this daily level, and then it got hammered again, a bearish engulfing candle out of my sweet spot. So see, it exited, this bearish engulfing candle forced price to exit out of the sweet spot. So I just made a note, bearish engulfing out of the sweet spot. It's also below daily resistance. I thought this was a good sell place. I decided to place a sell right here, sell. And so this is what I want you guys to do. I want you to practice selling or buying. I want you to practice taking trades. But now I want you to figure out where do we set our stop loss? And I said in a previous video that it's, if we're trading out of the sweet spot, a good spot for our stop loss is 78.6. Also, we have to look at the previous candle. See how before we got this bearish engulfing, the previous candle, the wicks are about this area here. So you always want to be past the wicks, and you also want to be, you know, maybe at the next Fibonacci level. So this would be a good stop loss area. But again, I don't want you just randomly creating stop loss areas. I want you guys to start measuring your stop loss, and you measure stop losses in pips and pipettes. So hierarchy over here, I already have this tool. It's the date and price range tool. So you can also use this measure tool. So this measure tool, you know, you just click here and it does a little measurement, and then once you click it once, it kind of goes away. So what I prefer you guys to use, you can use this measure tool, but I like this tool better. So right here, if you go here and see this date and price range. So if you favorite that, see how if you click on that favorite, it'll show up in your up here in the right, it'll show up in your favorite bar. So we're going to use the date and price range tool. So right here, date and price range tool. So since I'm selling right here, I'm going to measure my stop loss. So see, I put a stop loss about here. So stop loss here, I sold here, it's measuring back. It's telling me it's 154 pipettes and 15.4 pips. So it falls in my my range. I want to place trades that are about 15 pips. So 15 to 20 pips. Let's try to, our goal be 15 pips, because that's a nice small stop loss, but not too small, but not too big. So our goal be 15 pip stop loss, and 15 pips is 150 pipettes, but this is 15.4 pips. So our stop loss will be 154 pipettes. So that, like I told you, I was going to show you one way to measure it. You could also use, let me just delete some of this stuff. You could also use this tool here, the short position tool. So this is your risk reward tool. So what I do is I move this to our in line here. So this is where we sold. And then I'm going to move this line to our stop loss area. And then our take profit is going to be down here. And then you can see here, again, 15.1 is our stop loss in pips. It's equivalent to 151 pipettes. This shows us our risk to reward is 2.75. And then it also shows us here, so it basically took our pipettes stop loss, multiplied it by 2.75, and then it gives us our calculation here, 416 pipettes will be our take profit, or 254 pips. Sorry, or 41.6 pips. Ignore this amount, this value here. So all we want to look at is this value here, the pipettes, which is 41.6 pips. Let me just delete that. And so those are two ways to measure your stop loss in pips and pipettes. And then again, I'm just going to jump back to MetaTrader 4. So when you hear you've calculated, say your stop loss is going to be 150 pipettes, then you can go ahead and just place your, let me just delete this trade really quick. This is the trade I showed you last time. Let me just close this. So basically, when you're ready to place a trade, you just go new order, you make sure your volume or lot size is 0.01, you hit place a sell, you come over here, you click and drag back, and you set your stop loss to 150 pipettes, which is equal to $1.50. So see how from TradingView to MetaTrader 4, that's how you set your stop loss, and that's how you measure your pips. Okay, so I hope you understood that lesson. It was a good one. It went a little longer than I wanted, but I hope you understand how to measure your stop loss in pips and pipettes, and I hope you understand how you can calculate your dollar value that your stop loss is going to be, and also MetaTrader 4, it does the calculation for you, so you can just drag and set your stop loss. So I want you guys to start practicing taking trades, set a 15 pip stop loss, and have a take profit of at least 2 or greater. Okay, practice that, and I'll talk to you soon. Thanks for watching.